Hey there, fellow investors and YouTube enthusiasts. Today, we are diving into the world of ResMed CDI, a company that's got me intrigued, and I think it'll spark some interesting discussions. So, ResMed CDI, or RMD for short, is a medical equipment giant with a unique story. Founded in Australia but now based in the US, this company has a global reach and an impressive product line. They're all about helping people breathe easy, quite literally, with their industry-leading CPAP machines for sleep apnea. But is this company a good investment for the long haul? That's what we are here to explore. Now, when we talk about investing, it's all about understanding the numbers. And RMD's numbers are pretty impressive. Over the last 3 years, their revenue has been growing steadily, with a CAGR of 13.6%. That's a solid foundation for any investment. But it's not just about the top line. We need to dig deeper. The gross margin, which tells us how profitable their core products are, sits at a healthy 57.4%. That means for every $100 of goods they sell, they're making a decent profit. And when we look at the bottom line, their profits have been soaring, with a CAGR of 29.1% over the last 3 years. That's a growth story I can get behind. But it's not all about growth. We need to consider the financial health of the company. RMD has an interesting debt situation. Their net debt is negative, which could be seen as a good thing, a safety buffer, if you will. But it could also indicate inefficient capital allocation. The debt-to-equity ratio is relatively low at 18%, which is a positive sign. And their return on equity, ROE, of 22.7% is impressive, showing they're generating good value for shareholders. So, what does all this mean for the RMD share price? Well, currently, their shares are trading below their historical average price-to-sales ratio. This could be a sign that the share price has fallen, or it could be that their sales have increased, or both. And with their revenue growing, it's an intriguing prospect. But as any savvy investor knows, we can't make decisions based on one metric alone. That's why I'd recommend checking out some of the free online investing courses offered by Rask. They've got great resources on discounted cash flow and dividend discount models, which would provide a more comprehensive valuation of RMD. In my opinion, ResMed CDI is an interesting investment prospect. With solid growth, healthy margins, and an innovative product line, they've got a lot going for them. But as always, it's important to do your own research and consider the bigger picture. Investing is a marathon, not a sprint, and understanding the long-term potential is key. So, there you have it, my take on ResMed CDI. I'd love to hear your thoughts and opinions in the comments. Let's keep the discussion going and learn from each other. Until next time, keep exploring, keep learning, and happy investing.